All right, let's walk through what's actually moving the market right now. So the biggest story is energy. Shipping through the Strait of Hormuz has slowed dramatically, and the one of the most important oil routes in the world. So whenever the area get unstable, the first thing the market reacts to is oil, and that's exactly what we saw. Oil jump because traders are now, pricing the possibility of supply disruption. Now, why does that matter? Because when oil goes up, it doesn't just affect gas prices; it raises transportation costs, manufacturing costs, and eventually, that feeds into inflation. And if inflation start creeping back up, the Federal Reserve, can't just cut interest rate as quickly as the market was expecting. So that's why, bonds yields have been, moving higher, and why the dollar, has been strengthening. So when uncertainty rises and rates stay elevated, money tends to move into, the dollar. Gold is reacting to, but it's getting put into two different directions. On one side, you have geopolitical fear pushing it higher, and then on the other side, you have rising yields and a stronger dollar putting pressure on it. So that's why gold has been swinging around so much. And when you look at stocks, you're seeing volatility, but not a full breakdown. So the market is basically trying to figure out whether this situation escalate or whether things stabilize. So what should we watch next? Well, first, oil. If oil keep climbing, inflation becomes a bigger concern. So second, the dollar and bond yields. If bonds stay strong, that keeps pressure on risk assets. And third, watch credit markets. If the credit spreads start widening, then that's usually the early signal that volatility could turn into something more serious. So right now the market isn't collapsing. It's repricing risk. And as always, the goal isn't avoiding losses or chasing home runs. It's about surviving long enough to win. See you next market breakdown. Peace.